when you have the bravery to imagine and the will to get things done. That's Africanacity. That's ABSA. Corporate and Investment Banking.
You're watching Africa Trade and Business. I'm Ntauleng Lechela, standing in for Bronwyn Seaborn. In this week's episode, we focus on Sub-Saharan Africa and the growth outlook for the region. But before we get to that, here's a look at your news making headlines across the continent. President Bola Tinubu has met top officials of the Islamic Development Bank to negotiate a multi-billion-dollar infrastructure finance facility. This would be used to build ports and power plants. This comes as the country has also agreed to a series of investments and cooperation deals with Saudi Arabia. Tinubu is on a drive to drum up investment rather than rely on borrowings as the country's fiscus comes under pressure. The International Monetary Fund has approved a loan of about $178 million for Malawi. This includes an immediate disbursement of about $35 million. Finance Minister Simplex Banda says the move is a big breather for the economy. The funds will support the country's budget and ease foreign currency supplies. Ghana is making progress in talks to restructure its external debt, and so a resolution on the matter could come by the end of the year. That's according to the country's finance ministry. The aim is for an agreement in principle on restructuring parameters with Ghana's official bilateral creditors in the coming week, and that then be later formalized in a memorandum of understanding. On negotiating to restructure Eurobonds, Ghana has received proposals on debt treatment scenarios from two bondholder groups. Sticking with Ghana, public servants will receive a significant pay hike. The West African nation's government and the Public Labour Union have agreed to increase state workers' base pay by 23% across the board. This will cover the period from January to June 2024. The increase will then be readjusted to 25% from July to December. 2023 has been a difficult year for activity in sub-Saharan African economies. The IMF expects growth to fall for the second year in a row to 3.3% from 4% last year, but it's anticipating a rebound for 2024. Brown caught up with Luc Eyraud, Director of Regional Studies at the IMF, about that outlook. Here's the conversation.
Indeed, we expect a recovery from 3.3% in 2023 to 4% in 2024. A recovery that should affect most countries in the region, and it's mostly related to three main reasons. One is South Africa growth should pick up with the dissipation of some of the problems related to load shedding. Second, with inflation going down, consumption should pick up in many countries. And three, there are also a number of mining and hydrocarbon projects coming on stream in several countries like Senegal or Niger.
So that's some of the upside potential coming through there. What are some of the risks that could see us not reach that 4% growth target for next year?
I think there are two main risks. One is the volatility of commodity prices, and the second is a slowdown in China, of China's economy. So first on commodity prices, commodity prices have been very volatile in recent years, and the recent conflict between Israel and Gaza is perhaps going to even aggravate this problem. Higher oil prices would be detrimental to the region, since it would mean a higher import bill for oil importers, higher energy subsidies, also higher inflation. Second, China's growth is slowing down. China growth was around 10% in the first decade of the millennium, then went to 8% in the years 2010, and we now expect growth in China to be around 4% in the next 5 years. And this is not good news for Sub-Saharan Africa, because it will mean more difficulty to export to Africa, and also less financing coming from China to African economies. Actually, we estimate that when growth decelerates by 1% in China, this reduces growth in Sub-Saharan Africa on average by 0.25%. So quite a significant impact.
So we have those challenges coming through. Also, key themes that were present in the past year was high interest rates and high inflation. Do you see that carrying through to 2024?
So indeed, we have seen that central banks all around Sub-Saharan Africa have increased their policy rates in 2022 and 2023. So now inflation is coming down on average in the region, but it's still very heterogeneous. You still have 1/3 of the countries with double-digit inflation. So what we are going to see probably next year is very different types of patterns depending on how central banks respond to very specific country circumstances. In countries where inflation is very high or even increasing, probably interest rates are going to continue increasing. In countries where inflation is decreasing but still much above the central bank's target, then here probably central banks are going to keep rates on hold. And the third case is when inflation decreases and becomes very close to target and inflation expectations are well anchored. Here probably central banks are going to move towards an easing of their policy stance.
And it's such a tough position to be in as a central bank because on the one side you have to tame inflation and yet you also have to get growth going again, right?
It is a very difficult balance. At least there is one good news. Inflation is decreasing. You know, we had inflation at 10% on average in the region in March and today we are at around 7%. So this actually alleviates a little bit the trade-offs that central banks face.
A key stumbling block in the past year, or the past 2 years, we could really say, has been debt and debt management. Do you see that filtering through to next year as well? Have we reached the bottom? Have African countries really got a handle on their borrowings? Or are we still going to see that be a struggle next year?
So indeed, debt costs have increased very much. I mean, an indicator that we look at the IMF is an indicator of interest paid by the government divided by the government revenue. So, and this ratio of interest to revenues has almost doubled in the past decade. And today we have half of the low-income countries in Sub-Saharan Africa that are either in debt distress or at high risk of debt distress. The good news is that policymakers are tackling this problem up front. We have observed that majority of countries have started consolidating their public financing, strengthening their budgets with a reduction in deficit expected for this year, but also for next year.
As you point out, servicing debt taking up a big share of many countries' fiscus, and what that means is that there's then less money for projects that are actually going to stimulate growth. So do you see donors coming into that breach and really supporting projects that are going to create jobs and get economies going again?
Indeed, I think the international community needs to be really present to alleviate this funding squeeze that many African countries are experiencing at the moment. At the IMF, we are trying to do our part. We have provided $55 billion to Sub-Saharan African countries since 2020, and we have today 26 countries out of the 45 in Sub-Saharan Africa, so more than half, that have a financing arrangement with the IMF.
Well, to get that support like you talk about from the IMF there, what's the one thing you recommend to governments that can encourage donors and encourage investors to really see the economies as potential drivers of growth? What's that one thing, in your opinion, Luc?
There are many things that governments should do, but one big priority is education. In the next decade, you know, half of the increase in the working age population in the whole world will come from Sub-Saharan Africa. Can you imagine? It's 1 out of 2 people entering the labor market will be in Sub-Saharan Africa. So if you want these new entrants to be productive and to integrate the world economy, they should get high quality education. So here there is a big push that governments should do to increase the quality and also the financing of education.
That was Luc Eyraud, Director of Regional Studies at the IMF. And that's where I leave things for you for this week's episode of Africa Trade and Business. From me, Ndawling Lechela, and the rest of the team, it's goodbye for now.
when you have the bravery to imagine and the will to get things done. That's Africanacity. That's ABSA. Corporate and Investment Banking.